Mastering financial statement forensics empowers lawyers to detect manipulation, quantify damages, and build compelling legal arguments in complex disputes. In high-stakes litigation, the truth often hides in the numbers. Financial statement forensics is your key to uncovering manipulation, quantifying damages, and protecting your client. TechFlow Solutions, Inc.'s liquidity ratios show a decline from Q4 2022 to Q4 2023, with the current ratio dropping from 3.13 to 2.05, and the quick ratio from 2.87 to 1.57. While these ratios remain above typical thresholds, the downward trend raises concerns about potential financial strain. Moreover, any underlying manipulation of assets or liabilities to maintain covenant compliance could void loan agreements, emphasizing the importance of accurate reporting and consistent liquidity management to avoid legal and financial repercussions. TechFlow Solutions, Inc.'s cash flow analysis reveals a concerning trend. The operating cash flow OCF to net income ratio dropped from 0.89 in Q1 2021 to 0.49 in Q4 2023. This indicates that profits are increasingly failing to convert into cash, a classic red flag for potential financial manipulation or aggressive accounting practices. Since OCF reflects the actual cash available for operations, such discrepancies between cash flow and profit can be critical in court, as they may signal underlying issues with the company's financial health and transparency. TechFlow Solutions, Inc.'s cash flow statement reveals critical inconsistencies. Operating cash flow OCF declined while profits increased in 2022, suggesting potential earnings manipulation. Additionally, capital expenditures CAPEX were suspiciously reduced during a revenue spike, raising concerns about underinvestment or misclassification. The overall volatility in total cash flow is inconsistent with claims of stable operations, which could indicate deeper financial irregularities. These findings are significant for legal scrutiny, as they may point to intentional misrepresentation of financial stability. The importance of the CLEAR method in CAPEX versus OPEX analysis. The CLEAR method provides essential structured financial analysis for legal professionals detecting sophisticated manipulation schemes. TechFlow's acquisition case exemplifies this power. Connect establishes the story context of management pressure creating incentives for misclassification. Link rounds analysis in fundamental CAPEX versus OPEX accounting principles. Explain demonstrates concrete evidence with $500 server hardware and $300 custom software improperly reclassified as operating expenses. Apply reveals acquisition disputes when CAPEX to revenue ratios plummet from 6.8% to 0.7%, signaling financial engineering. Review synthesizes how this systematic framework prevents costly legal oversights in complex M&A transactions contract negotiations. Let's see the key forensic findings. Some multiple red flags across income statement, balance sheet, and cash flow. Patterns suggest intentional financial statement manipulation. Legal implications include fraud investigation, contract disputes, and potential criminal referral. The summary table highlights key red flags and insights across financial statements, emphasizing patterns of potential manipulation. Revenue spikes with margin jumps, premature recognition, and misclassified expenses signal irregularities in the income statement. Falling OCF to net income ratios, CAPEX misclassification, and working capital volatility further suggest financial engineering. Forensic synthesis identifies multiple fraud indicators, with legal implications including contract disputes, price adjustments, and fraud investigations. These lessons underscore the importance of thorough forensic analysis in uncovering financial misrepresentation. Lawyers who master financial statement forensics can detect manipulation, quantify damages, and build compelling legal arguments in complex disputes. This case study, as explained in the last two lessons, demonstrates the power of integrated financial statement analysis for lawyers. By systematically applying the 12 lessons, legal professionals can uncover hidden issues, support litigation, and protect clients in financial disputes.